The Bureau for Economic Research has lowered its real GDP growth forecast for South Africa to around 1.5% for 2025, down from 2%. They now expect average growth of about 1.6% from 2027 to 2030. This revision is due to slower progress on domestic structural reform, stalling consumer momentum, and increased global uncertainty concerning potential U.S. Trade policies under a Trump presidency. Shannon Bold, economist from the Bureau for Economic Research, joins us now. Thank you so much for your time, Shannon. We will obviously be unpacking some of those themes. Firstly, lay the table for us on what has certainly changed since the 2nd of April. How different does the world look pre-Liberation Day and post-Liberation Day?
No, thank you for having me. I think Liberation Day is definitely one of those major changes that have taken hold of our forecast. So you mentioned that it was a bit of domestic coming into play with our revision.
Yeah.
A lot of that had to do with the longer term, but the near-term revision has to do with that global uncertainty that is now coming to the fore. It's really impacted our rand. It's taking a toll on the markets. That obviously will feed through into things like inflation.
Yeah.
And general uncertainty in the market is not great for things like investment and consumer spending and things like that.
Yeah.
It creates a lot more friction. And when there's friction, there's less investment able to get through. With that increased uncertainty.
And there is so much uncertainty and so many unanswered questions. What themes then are you looking at in terms of the impact of the greatest uncertainty, which is the tariff policies from the US?
So it was quite funny when we were doing our forecast. It was right after Liberation Day.
Yeah.
And we had to change our assumptions around the global economy almost every day.
Sure.
So it took a while to even get this forecast run. But I would say that we, apart from the baseline scenario, we also do scenarios around our forecast, usually an up and a down.
Okay.
And in our downside scenario, we've now baked in things like a US recession taking place this year, particularly taking hold in the second half of the year.
Yeah.
China's stimulus not being able to come through. And remember, China growth is positive for South Africa when it's positive for commodity prices.
Yeah.
Because then we get the export benefits from that. There's also just general market volatility, which is not, as I mentioned, not great for things like investment. It's not good for the rand. It's not good for inflation. So this risks, obviously, low investment in the economy, a weak consumer on top of an already weaker consumer than what we had at the beginning of the year, slower exports, and then layered on top of that, this modest reform pace that we have, and domestic uncertainty that we have coming to the fore. I mean, we're now heading into budget 3.0.
Yeah.
It's just, it's just a lot's happening all at once.
Well, talk to me about the rand, because our rattlesnake actually has not been rattling much lately. It's actually been quite stable against the dollar, just above 18 rand with that. And I'm just wondering if there's some safety that people have found in our local currency at this point.
So I think, the rand, they call it a high beta currency, which means that when it reacts much wider than other emerging market currencies. So there might have been some overreaction in the rand when Liberation Day and the weeks that followed happened. But I think if you were to compare it to what we call the fair value, there's still a lot of runway for the rand to be able to strengthen.
Okay.
In our negative scenario, we actually have the rand breaching 20 rand to the dollar for a sustained period, which would obviously have quite major impacts. But on the other side, in a positive scenario, it could hit 15, 16 rand to the dollar. And, there's, as much as scenarios give you a downside risk view, it also gives you an upside risk or, some potential. I don't want to sound too optimistic, obviously, but we have to try and be balanced.
It's quite interesting because I talk about people finding safety in the rand. The dollar is usually the safe haven asset, but we've noted quite significant weakness on the US dollar. But I mean, things are good. The rand is stable. Inflation is down below that lower band of the target range from the SARB. What options then does the SARB have at this point? Also considering that the consumer is still not in a great position.
So I think hindsight is always 2020, right? If we were to go back to when we started the cutting cycle, if the bank knew, and if a lot of us actually knew what was going to happen with inflation, maybe we could have had bigger cuts coming through. But we were all forecasting much higher inflation than what it has come out at. And every month it's been something different. In the beginning, when the GNU formed, there was a lot of positive market sentiment, which helped the rand. The oil market was doing well, so the fuel price deflation came through nicely. We've had some downside surprises on food inflation, and obviously households will not necessarily feel this in their pockets. They still see high petrol prices, high food prices. But if you look at inflation compared to a year ago, it obviously is better off than where we were. But I think the bank is well aware of a consumer that is struggling financially. But now we're talking about, what's the difference between 25 bips and 50 bips for the person on the street, right? Because monetary policy or the repo rate, it really affects everyone across the income spectrum. But the credit holders, the major credit holders, are those higher income households, which 25 bips, what is that going to do? I think the bank is also more focused on the outlook, the 12 to 18 month outlook. That's what they target. And they've been emphasizing a lot about this risk matrix that they're taking into account. And Liberation Day happened and he took a little bit back, but there's only a 90-day reprieve. What's going to happen in the second half of the year? There's a lot of risks coming into play. And I think just because of where the rand is right now, we shouldn't we shouldn't forget, rather, about those risks.
All right.
But perhaps they could come across more dovish.
All right. Well, we will also see from our finance minister in about 2 weeks in terms of what he says and the impact of that budget 3.0 on the financial position of the South African citizen. Thank you so much for your time, Shannon. That was Bureau for Economic Research economist Shannon Bold.